Buying and selling stampedes. When will this selling end? That's coming up on 3 Minutes on Markets and Money. Markets always operate over time in terms of what we call a buying or a selling stampede, and that is where prices tend to rise kind of incessantly for a period of time, and it seems like, hey, markets can only go up. And then markets get into a period where, well, they just sell off every day, and we're like, well, when is this selling ever going to stop? These are those buying and selling stampedes that occur in markets, and they occur with regularity. A good example of this was this buying stampede that we saw from the July lows that led to the August highs. That was a buying stampede. That was that, whole feeling, the bull market's back, everybody's getting bullish on the markets, the bottom is in. And then we get into a selling stampede, which we've been in now for 13 days. And that is that point to where we're just like, man, is the selling ever going to let up here? And again, if we have to keep this into some perspective, yes, markets have certainly declined here over the last couple of weeks, but we're still above the July, August lows. And what's important is always to keep some context about where we are. Now, the risk, of course, is that markets are going to retest these lows eventually here in the next couple of weeks. And that certainly wouldn't be a surprise given the context of where we are within the markets and where we are within the context of the Federal Reserve hiking interest rates, tightening their balance sheet, etc. But that doesn't mean that markets just go straight down. Again, markets tend to get exhausted over time, and these selling stampedes are where you start getting the sell-off in the markets, and we just get to the point that we exhaust sellers entirely. And again, we can take a look at some indicators that will help us kind of determine that. One, if we take a look at our overbought, oversold indicators, we're now back to oversold conditions. Again, suggesting that we've kind of wrung out a lot of that selling pressure in the markets. Now, one of the more important indicators that we follow is our MACD indicator. That's the moving average convergence divergence indicator. Just basically measures two different moving averages. Are they expanding, getting wider from each other? Are they converging? That indicator right now on a sell signal suggesting that market prices do have further to fall, which is why it's very likely we're probably going to retest these lows at least in the next couple of weeks to the next month or so. September tends to be a weaker month of the year. We still have the Fed coming up to hike interest rates. They could be more aggressive. That could send stock prices lower. But even within the context of a sell-off like we're having now in the markets doesn't mean markets can't bounce within that. Think about throwing a ball down a hill. If I stand on top of the hill, throw a ball, it's going to bounce down the hill. And that certainly would be well within the context and confines of what we would expect in the markets here. So any type of market bounce, here's the hill, we're going down, market bounces up towards the 50-day moving average. That would certainly be a good place to lift some exposure out of markets temporarily, raise a little bit of cash, because very likely we're going to see this market try to go ahead and move on down, trying to test some of these recent lows. That would be the expectation. Now, if for some reason we get some good news out of the markets and markets can break above that resistance, well, then we've got a shot at moving back here towards these August highs. That can certainly be the context as well. And this is why we often talk about not making a big one-sided bet. Don't bet on the markets going lower, because markets can and do often things that we don't fully understand why or fully expect. Right now, markets are very oversold. Sentiment's getting very negative. Technical indicators are getting fairly weak here. Those are all positioning the markets here, at least for a short-term bounce that can be used to sell into and raise some cash. So be a little cautious here. Don't get too bearish on the markets. Look for rallies to sell into currently, and then we'll just have to determine, once we get more information on the Fed and on the economy, where markets are likely going to go to next. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. We'll be back tomorrow.